process. In this video, we're going to talk about some fabulous favorites. We are going to summarize the importance of data analytics and reporting for financial reporting decision making. Let's begin with our financial reporting features in an ERP system, Enterprise Resource Planning. Here you see my favorite, financial. Then we have sales management. We have our CRM, our customer relationship management. We have our supply chain management, production, and our HR management as well. Here we are taking a look at a complex database general ledger example, and you see the links here. We have our chart of accounts, our account balance, our reporting periods, the journal entry, and our HR employee. Whenever an accounting information system is involved within a business process, it typically collects and stores information that can eventually be converted into reports, which hopefully provide management with crucial decision-making information. We like to make data-driven decisions in business. So financial statements are the summary level reports that gather this important financial information that might have to be presented to the public. So let's review each financial statement report and describe it. So we all should know by now that the income statement thus gives us the results of operations and financial activities within a period of time, includes revenues, expenses, gains, and losses. Then our balance sheet gives us our assets equals liabilities plus owner's equity, which is our ALO, or our accounting equation. Then we have the statement of cash flows, and this shows us the inflows and outflows of cash. Cash is king during the reporting period, and it gives us this information in operating, financing, and investing activities. Then we have the statement of stockholders' equity, which shows us the changes in the company's equity from the opening balance to the end of the reported period. It includes our profits or losses, dividends, and our inflows or outflows of equity investments. And lastly, and also as equally as important, are the notes to the financial statements, which gives us explanations of the activities and the details of accounts. We also might want to conduct our income statement, our vertical analysis, or our horizontal analysis. When we're thinking of our vertical analysis, we're going to look at ratios like the cost of goods sold as a percentage of our revenue, or gross profit as a percentage of our revenue. And what this does, it allows us to identify the company's performance and hopefully may show us if we might have some fraud risk. For our horizontal analysis, here we are looking at one account over multiple years. So this is a year-over-year time trend analysis, which we're comparing this period's ratios to prior periods' ratios. And what this allows us to do is identify changes in performance or unusual activity in the income statement account that also might indicate some financial statement fraud risk. Then we move back to our balance sheet and more ratios. Here we might look at the quick ratio, the current ratio, or a debt to equity or inventory turnover ratio. And this helps us analyze our company's performance, and we can compare this to external benchmarks of our competitors and hopefully also give us some risk assessment. Then we might do some general ledger monitoring. Here we are looking at journal entry activity and really perform a real-time testing of those journal entries, again, to look for possibly some fraud risk. This helps us see some fraud red flags, and then we can test these journal entries against what we can consider predetermined risky behaviors. And then we have KPIs, key performance indicators, and we usually portray these in some type of dashboard. As you see here, we have working capital, then we have our current and our quick ratio showing our cash balance, our days that our payables are outstanding, and our days that our sales are outstanding. As a CFO, I always looked at my KPIs every morning, and it was one of the most important dashboards that I created. So this concludes our lecture for the financial reporting process. I hope you've enjoyed. Thank you so much for watching.